Okay, guys, welcome back. I'm going to do a closing market wrap video. We saw some interesting price action in the markets today, and the market breadth, the S&P 500 heat map. I'll show that here in a second. We didn't see much strength really across the market. Google obviously was very strong. It gapped up and did relatively well. Amazon was weak. So we're going to go through that. I'm going to point out what we want. What I'm looking at right now. Give me a thumbs up. All right, we're going to start out with QualCom. QualCom just reported earnings, and they missed apparently. You can see it's down about 8% in the aftermarket. I posted a comment to a subscriber this morning about QualCom looking weak and not actually, basically, and I showed it in the video this morning as well. I showed the fact that they made it look like it was going to recover support, but then it sold off and broke down and really just hung out underneath this trend line all day. So as I roll out, just to look at the bigger picture and as to why I took a short in this, what I liked about it. Let's go to the daily. So there's the upward price channel in QualCom. This is since the March 2020 lows. It's just been rocking up this price channel, and there's been no breakdowns. I've taken a couple shots up here at resistance. I took a short right up here at resistance. Was able to get out with a small reasonable profit because I added to that short each time it hit resistance. And then when it got this sell off here, I covered that short because again I covered it down there because it was still within this price channel. Until you get a break of the price channel, that's when this thing really looks to roll over. But while it was in the price channel, I wasn't really looking for much of a breakdown. So then it just kept rocking up, and it was really off my radar. I mean, I kept looking at it, waiting for the breakdown, but it was still within that price channel. And then just recently we got a sell signal. So there's the sell signal right there. That's your breakdown of the of QualCom. It broke that trend line pretty cleanly. That's an impulsive breakdown. We didn't have any follow through, but we did obviously get that sell signal. And then what they did is they ramped it up, recovered support, really only for one day right there. As you roll it, you can see it recovered support right there. Today they gapped it even higher and made it look like it was going to just continue to ramp higher within this price channel. But see, that was when it opened, and it opened and instantly sold off. That was your tell, or at least that was a tell from me. The fact that, they could have recovered it, and, they gapped it higher within the support. They could have recovered it, but they sold it down. So somebody knew something. That's how it works typically, is you'll see, usually with earnings, you'll see some price action take place before the earnings, a negative earnings report comes out. So, usually bad earnings, it'll show up in the chart a little bit before. Doesn't always. Sometimes it just pops up. But the point is, the reason why I still liked this short is we had a sell signal. We broke down. We recovered support, but then there was no follow through on that recovery, and it sold back down. Now, we're in the after hours. Obviously, it's selling off. We'll see how it opens tomorrow. I suspect it opens, with a decent sized gap down, and that is going to, we've got a sell signal. It's just a clean and clear sell signal. So you had the original sell signal right here, and now, let's say they gap it down at this 151, 152, something like that. It's going to open up cleanly down here, potentially even lower. It might be open up down at 140. We don't know where it's going to open, so I don't want to speculate too much. But the point is, if this aftermarket sell-off holds, then we're going to get that clear gap down. That's going to create what looks like to me a good-sized trap. So watch for QualCom to gap down and then probably just continue to flush. Again, this has been in a big upward channel, so it's likely now that it will be obvious on the open tomorrow that upward price channel is no longer valid. We should see a run for the exits on this one. So where do we go? Well, we have a clear gap right down here at 130. So I'm looking for gap fill. I think that's what it'll probably sell off in gap fill, possibly tomorrow, and that's what I'll be looking for. Most likely we'll get a bounce at that gap fill down around 130, and then probably continue lower. We have another gap all the way down here at 93.90. So that's an open gap that has not been filled. If we break this 130 area, we'll probably come down, chop around here for a little bit, and then eventually come down and fill that gap down at 93.70, or 93.94, whatever, right in the area. For me, that will probably be the final profit target on that one. And that's what I'm looking at. But I'll likely, take some profit up here at 130 as well. And again, just to finalize this one, negative divergence on the daily chart on the PPO, negative divergence on the RSI on the daily chart. I usually almost always want to see negative, or I want to see a divergence, whether it's bullish or bearish divergence. I want to see that show up on the daily time frame for a swing trade. If it shows up in the hourly, it's usually good for a multi-day, maybe a week or two trade. When it shows up on the daily, it's typically good for maybe several weeks, maybe a month or two. Can morph into more. And then obviously when it's on the weekly chart and that starts to play out, then that can set up for a much larger trend. Nike here. So you can see they popped above this resistance about 138.80 just a little bit, and today sold off and closed right at that level. So we're still at, we're basically at support / resistance. To me, I think this is likely an overshoot of that, and we're going to come back down and continue the downtrend. Nike looks like it broke its uptrend. Here's your bearish rising wedge. And you got the sell signal right here. And, two breaks to the upside. When you see breaks to the upside that fail, that's further proof that you're going to likely going to break down. And when you do break down, it's like a higher probability that breakdown is going to stick. And so far, I think this one is going to continue to downtrend. So we broke here, back test of that trend line, continued to break down, hit support right here at 131. Reaction, and now, this reaction is likely played out, and I think we're likely to continue the downtrend. And again, on the daily, negative divergence on the PPO, negative divergence on the RSI. Let's look at PayPal. Looks like PayPal had some positive earnings. They're up 2% in the after hours. Again, after hours that's not the market. It's very thinly traded in after hours. So ultimately, we want to see what the market does with that when it opens. And so keep an eye on that. What I think is going to happen, if PayPal looks like it's going to, right now it's at 257. So let's say it opens right around 257. That will be a recovery of this blue trend line right here, this upward trend line. But we had a breakdown in the sell signal. And that's a pretty good sell signal right there. We have a back test. Now they're going to gap it up back into the trend line. I think that fails. I think that fades from right there. Going to the daily chart, you can see, all the way up here, they're going to gap it up, and I look for selling right out the gate. And look for it to come back below this trend line. And that, if it does that, that would, to me, that would be a signal that this is the area where the sellers are at, and they're going to sell this thing down. And it's actually, PayPal is actually going to continue to downtrend and go quite a bit lower. So just something to anticipate in case you see that. I'll be looking for that as well. All right, so the dollar today continued to rise against the euro, but in all, it was still flat. The dollar's still trying to determine if it wants to break out or not. So I think if we see that impulsive break higher in the dollar from these levels, we're really right at that point where if the dollar goes much higher from these levels, the market should start to react negatively. So just that's really all I'm paying attention to is, does the dollar rise from here? Gold, gold pretty much was flat today. But again, gold has been forecasting dollar strength, for a while. So I'm not seeing bullish signs in gold yet. Now, if we get a little bit lower prices, a drop down to this below this most recent low right here, and we do it sometime soon, then we'll probably have that bullish divergence that I would be looking for on gold. So, that's what I'm looking for is, does bullish divergence start to show up on gold? And if it does, then we can start to build a bullish case for gold and the gold mining stocks for the next leg higher. TLT, let's look at the hourly here because this is an important one. Yeah, TLT pretty much sold off today. So, TLT is the long bond. If you look at BND, I think that's more of a shorter term bond. Or actually TNX, this is your 10-year treasury yield or the interest rates basically on the 10-year. And TLT is the long bond. And the point that I want to make on this is the shorter end of the curve, the 10-year is rising, and that's not good for markets. The market can't handle interest rates, too much higher. That's why the Fed is fighting that. It's fighting the interest rates from rising. So if you look here, let's look at a daily chart. This is interest rates. This is just charting the interest rates through an ETF. But basically, you can see that we've got this downward trend line in interest rates. So interest rates have been falling since the Fed did that reverse course back in 2018. And this is when the S&P 500 actually broke its bull market trend line, its bull market support. And this is when the Fed started easing. They've been easing ever since. And we're coming up to that trend line. So if we see if there's a breakout right here in interest rates and interest rates really start to rise, watch out. There could be some problems, coming. So again, interest rates are rising right now on the potential for economic reflation, but the market is so loaded down with debt, it's not really going to be able to handle higher interest rates unless there literally is economic reflation. And so far, we haven't really seen that in the data that the economic reflation is there. But the market's starting to price it in, so we'll see what happens on this one. Okay, I want to flip over to this S&P 500 heat map, and I want to show you guys really what the S&P 500, which really is, for the most part, the stock market, did today. And you can see relatively kind of muted. Energy was strong. That's one section that was called out. And financials were, kind of strong, not super strong, but relatively strong compared to the rest of the sectors. And again, that's the reflation trade that we've seen. So we're seeing, that's what the market was continuing to price in is reflation, inflation, higher interest rates. And that's what they're pricing in. Is that the correct trade? Well, I'm not sure. That's what's been working. That's what's been working since oil started to rally, and so we're still seeing that. But look at the rest of the market. Tech. I mean, for the most part, Google is the shining star today. The rest of the market was relatively weak. I mean, in terms of market cap weighting, financials, kind of flat. The energy was up, but that doesn't really move the market. And then tech obviously was up, but it's really because of Google. So look at that. Let's go over to Amazon, and this is where I'm going to wrap up. But I want to point out these over here. Apple, we'll start with Apple, I guess. So Apple sold off today, down, 0.7%, 0.8%. Now, it hasn't broken the trend. Let's go to the hourly. It's just, it's sold off, but technically nothing's really changed. There's this trend line right here. I've got an alert set for it, but this is kind of going back to July of 2020. And we've got this trend line that this thing's been kind of walking up. We hit it just recently, and now we're still above it. So I want to see a break of that trend to tell me that there's weakness in Apple, and I want to see weakness in Apple to know that there's going to be continued weakness in the triple Qs. So I'm watching for that. Besides that, nothing's technically changed on the hourly chart. On the daily chart, we have negative divergence on Apple. So this is a divergent high price action, which tells me there's a higher probability that we roll over and break trend and start heading to the downside. Doesn't mean it has to happen, but this momentum tells me that we're losing momentum in Apple. So now we're just waiting for that trigger or sell signal. And, if we break trend in Apple, you can see this is going back to 2010 is when we created this daily price channel. We're well above it now. You can see we spiked well above it. But if we start to break, we could easily come down to the top of the channel, which, maybe is at 84 or 88, somewhere right in there. That would be a drop or correction in Apple of about 36, 35%. And that's pretty much on par with the corrections that you'll see in Apple. Apple right here, this correction was a drop of 40%. This correction in Apple was a drop from high to low of 32%. This one, probably very similar, 36%. So again, a 36 to 40% correction in Apple when it starts to correct is very common. And that's what I would be looking for over the longer, as a trend trade, as a correction all the way down to here. Possibly more, but for now, we'll just leave it at that. Microsoft. All right, so what did Microsoft do today? Well, this is interesting. So it looked like it was starting to break out, and all day it looked like that. It wasn't super impulsive, but again, it was trading higher, looking as a breakout, and then into the close, they faded it down. Look at the daily. Look at the daily chart. That's not a breakout. All right, it's too close to be considered a breakout. And with that wick as it sold off, to me that looks like it was stopped, and we're likely going to see it start to roll over now. Could trade up here for a few days and kind of battle it out. But again, it was rejected. This really was a rejected breakout today, and we're still at this resistance line. It's about 242.75, and I'm looking for that. I'm watching that level to see if that's going to hold, and then if this is going to roll over. Amazon. Okay, Amazon, false breakout today, and this looks, in general looks bearish. We'll have to see how tomorrow brings, but we've got this downtrend line, really from the highs, kind of the all-time highs in Amazon, and we've been downtrending since that high. So it's very possible that was the bull market high in Amazon. Until you see a new high, that is the case. Doesn't mean it has to be, but that is the case as of right now. So we've been downtrending, just slightly making lower highs. Here today, we popped, after earnings, they gapped it up. Everything looked like good, looked like it was full steam ahead for a breakout. And yet you can see they came in and sold that down. So profit taking today after earnings, sold it down back below resistance. So in general, there's nothing bullish about that. The fact that you had good earnings and it was sold into and you're back below what seems to be the resistance line, to me signals that was a false breakout, and we're going to go, we're going to go lower, at least in the near term, until we see a definitive break, I believe, of this neckline of about 290 or 2,930, we'll call it. Then until I see a definitive break of that, we're just sideways. But again, this still looks like a topping pattern. We've got this complex head and shoulders that it's not completely organized, but we keep seeing, this is the head, and we keep seeing these shoulders that just continue to play out and continue to get sold into. So we'll have to wait and see what happens. But as of right now, pretty bearish on the price action today was pretty bearish on the daily. Big negative divergence that continues to play out. Now we haven't had a new divergent high since the most recent high right here. This was where, this was your negative divergence. So I could probably, we can just mark it out. It really was that. And so far we haven't seen price move down, but again, price isn't moving up either, and it keeps getting rejected. So I think this negative divergence is due to play out for a drop. And where does it go? I think it's going to go down to this trend line. This trend line is your bull market in Amazon going back to 2009. So this is a weekly chart. You can see we hit it there in 2015, hit it there this is exactly where the COVID drop stopped and held support in 2020. And we bounced off of that. And if we're going to roll over, I think it's likely we come down to that trend line. Depending on when we get there is where the price will potentially be at. Google. Okay, nothing weak necessarily about today's price action in Google. Looking at the hourly chart, they sold it off into the close, but it still held the gap. So a break back into the gap, and usually when you enter a gap, you fill a gap. So if we break back into the gap, then I think it's likely we come all the way back down and give up all these gains and fill the gap. And that would be bearish all in itself. But as of right now, gapped up, ramped up, sold off, still holding kind of that gap level. So I'm looking at 2,062.63, an hourly close below that. And you want to see an impulsive breakdown, not just barely kind of whipping through it. An impulsive breakdown to that level likely would mean we're going to come down and fill this gap, which is, basically down around 1950. Until you see that, Google looks strong to me. Looking at the daily, we still, we have negative divergence. It's a big extended negative divergence that's been in play since the COVID drop. But we really didn't, the negative divergence showed up right here in August when you made a new high slightly. Oh, sorry about that. It actually showed up here in July. This was the very first divergent high. There's another divergent high, and then all of these new highs have been divergent highs, including the one today. Now, if we continue higher, we'll burn through this negative divergence. So any higher, and we're going to burn through it, and then we'll have to, pretty much, we won't have negative divergence anymore, and we'll have to just kind of go back to the drawing board on this. But if we turn down, tomorrow, let's say, or sometime this week we turn down and we don't go any higher from where we're at, we just kind of hang out sideways and then turn down, we're going to confirm the negative divergence with seeing the PPO turning down and the RSI turning down. And that means that this was likely going to be the top or the near-term high for Google. And we're going to see a pretty good breakdown in Google. So until we see those things, Google looks bullish until we see those potential developments. And there's no telling where Google will run to because it's at all-time highs. So, sky's the limit for the upside, and we're looking for developments of a top on this one. And to wrap this up, the SPY, you can see that today we basically went nowhere. We closed pretty much where we closed yesterday. We're up 0.8%. And we did not really go anywhere. So it's to be continued tomorrow, because today's kind of we just X out today and look at, we're in the same setup as we were in yesterday. Looking at the weekly, we're still below that breakdown week. We have not recovered that. And, this was a sell signal week. So we had a sell signal telling us that lower prices are going to come. We're pretty much closing right near resistance, at this 381.50 or, 381. We're right in the area, of 381 and some change, where we should get rejected, and we're just waiting to see that. So today and yesterday were, repeat days for the most part. And now we're looking for a definitive rejection of this resistance. That's all I got, everyone. So thank you, and I will catch everyone on the next video.